Welcome to The Deep Dive, your shortcut to understanding what's really happening in the dairy industry. Today, we're pulling apart the top stories making waves right now, straight from the Bovine newsroom.
That's right.
We're looking at everything from keeping your herd healthy and productive to the big shifts in global markets and, well, what those trade headlines actually mean for your farm.
Yeah, there's a lot going on.
So let's dive right in.
It's a complex picture out there, no doubt. We're seeing a lot of interconnected issues that dairy producers are having to navigate all at once.
Absolutely. And one area that's always front of mind is, the health and well-being of your herd, because that really hits the bottom line.
Culturally.
Our team at the Bovine has been looking at how focusing on the fundamentals of udder health can have a surprisingly large impact on profitability, often through those consistent day-to-day actions.
That's right. It's easy to overlook the cumulative costs of something like mastitis. USDA research tells us that each clinical case can cost anywhere from, $444 to $600?
Yeah, quite a range.
Now think about that. Across your entire herd, the reduced milk production, that's the big one, maybe 80% of the cost right there. Mm-hmm. Then you've got treatment expenses, cows that have to be culled prematurely, and even lost premiums for milk quality.
It all adds up.
It really does. Globally, we're talking billions of dollars in losses every year. So even preventing just one or two cases, that can make a noticeable difference to your farm's profitability.
Billions. It's a staggering figure. Now, the National Mastitis Council's 10-point plan, that's kind of the foundation here, isn't it?
It is, yeah. A really solid framework.
Looking at that, what are a couple of key areas that you feel are particularly relevant for producers to focus on right now?
Well, two critical areas really stand out. The cow's environment, particularly the barn, and the milking procedure itself.
Okay.
Starting with the barn, University of Minnesota research has shown a clear link between the bacteria present in bedding and udder health.
Makes sense.
Cows spend a significant chunk of their day lying down 12 to 14 hours on average. So if that bedding isn't clean and, crucially, dry...
Yeah, dry is key.
It can become a breeding ground for bacteria that directly challenge teat health. This is especially important for your transition cows.
Right, when they're most vulnerable.
Exactly. Recommendations include aiming for less than 100% stall capacity, giving them room, and ensuring adequate feed bunk space, maybe around 30 inches per cow. Moisture in the bedding is a major risk factor to watch out for.
Okay, so clean, dry, and not overcrowded. Seems fundamental. What about when the cows are actually being milked?
Milking time is really where precision and consistency, they're key. It's a sequence of actions that, when done correctly every single time, significantly lowers the risk of new infections.
Right.
Keeping the cows calm is important. Stress can affect milk letdown. Forest stripping helps you spot early mastitis and stimulates milk flow.
Two birds, one stone.
Pretty much. Then a thorough pre-dip. Let it sit for at least 30 seconds contact time, that's vital, followed by completely drying each teat with its own individual towel.
Individual towels, yep.
Attaching the milking unit within, say, 60 to 120 seconds after stimulation, that's considered the sweet spot for milk out.
Okay.
Proper alignment of the unit is also crucial, prevents liner slips, potential vacuum issues, and finally, the immediate post-dip, making sure the entire teat is covered. That's non-negotiable.
And that post-dip makes a big difference.
Believe it or not, post-dipping alone can reduce new infection rates by over 50%.
Wow, over half.
Yeah. That's a huge return for a relatively straightforward practice.
Those are really practical takeaways. It highlights that often it's the consistent execution of the basics that yields the biggest rewards. Now, what about the milking equipment itself? Even with the best protocols, if the gear isn't up to par.
Oh, absolutely. That can cause problems. Your milking system needs regular attention to support your udder health efforts. Regular maintenance is essential.
Like what specifically?
Well, replacing inflations or liners on time, consistently checking vacuum levels, and getting a professional to evaluate the entire system at least once a year.
Preventative maintenance, basically.
Think of it exactly like that. Preventative maintenance for your milking process.
Okay, so we've covered the environment and the process. What are some of the newer technologies that the Bovine has been highlighting that offer some advantages in managing udder health?
Yeah, there are some interesting innovations coming onto the market. For instance, Milkrite Interpols has developed these triangular liners.
Triangular.
How do they help? They aim to distribute pressure more evenly during milking, which can lead to better teat condition and fewer liner slips. They also have a tool called Emipulse that monitors various milking parameters.
An early warning system.
Kind of, yeah. Gives you a heads up on potential equipment malfunctions. Then you have in-cow monitoring systems like the Smax Tech Bolus.
Right, the boluses.
It tracks internal body temperature, rumination, movement, drinking patterns. What's really interesting is that it can detect mastitis up to 4 days before you might see clinical signs.
4 days early. That's huge.
It is, potentially reducing the need for antibiotics quite significantly, some reports suggest by as much as 70%.
70%? Wow.
And in robotic milking systems, Lilly's MQCC provides automated daily somatic cell counts, giving you much more frequent data than, traditional testing.
That early detection aspect sounds like it could be a real game changer for managing infections more proactively. What about the role of nutrition in all this?
Nutrition plays a supportive but important role. Helping cows maintain a strong immune system is key.
Right.
Feed additives like fibrosomnigen are designed to support immune function, making cows better able to resist those mastitis-causing pathogens. University research has indicated a pretty good return on investment with these types of products, potentially through increased milk, better overall health, and improved repro performance.
So it's really a multifaceted approach, isn't it?
Mm-hmm.
Environment, milking practices, equipment, nutrition, they all work together.
Definitely.
But the bovine also emphasizes the importance of the people on the farm, your team.
Absolutely critical. Research out of Michigan State University has clearly demonstrated that investing in thorough employee training leads to significant improvements in milking procedures and ultimately in milk quality.
It's not just what they do, but why.
Exactly. It's not just about telling your team what steps to follow, but ensuring they understand why each step is important. That understanding fosters more consistent adherence to protocols.
Makes sense.
Well-trained employees are also more likely to maintain proper pre-milking teat prep, ensure good teat disinfectant coverage, and stick to correct pre-dip contact times. Interestingly, this can even contribute to decreased average milking times, improving parlor efficiency.
That makes perfect sense. If the team understands the why behind the what, they're much more likely to be engaged and consistent. So, for a producer looking to really get a handle on udder health, what are the crucial steps in developing a farm-specific plan?
The University of Minnesota Extension offers a very practical 3-step framework. First, you need to identify the primary pathogens present on your farm through milk cultures.
Know your enemy.
Precisely. Knowing whether you're dealing with contagious or environmental organisms will significantly guide your control strategies. Second, analyze your farm's specific infection patterns. When and where are these infections occurring? Which groups of animals are most affected? This helps pinpoint the underlying risks.
Got it.
Finally, based on this data, you create a targeted action plan. Prioritize the interventions that will have the greatest impact on your specific situation.
And involve others.
Yeah, it's really beneficial to build an advisory team, your vet, employees, nutritionist, equipment tech. Regular reviews of your data with this team help you stay on track and adjust.
And keep monitoring.
And of course, consistently monitor key metrics like somatic cell count, mastitis incidence rates, culture results. See if your plan is working and make adjustments as needed.
So it's about understanding your farm's unique situation, bringing in the right expertise, and using data to inform your decisions. It sounds like those seemingly small changes in those fundamental practices, clean towels, full teat dip coverage, early detection, consistent bedding management can really add up.
Exactly. Big improvements in udder health and ultimately your profitability. Healthy udders aren't luck. They are the direct result of intentional management and a continuous focus on those critical details.
Okay, let's pivot now to some of the bigger economic forces at play. The bovine has been covering the rather complex situation with U.S. dairy and the Chinese market.
Right.
It seems counterintuitive. China's milk production is down, yet U.S. producers might not be able to capitalize. What's the core issue there?
Yeah. You've highlighted a key paradox. While China's domestic milk production is indeed projected to decrease maybe around 9.2% in 2025, the likelihood of U.S. dairy farmers seeing a significant boost in exports to China is, well, quite low.
Why is that?
The primary obstacle is a substantial 84% retaliatory tariff currently in place on U.S. dairy exports.
84%. Wow, that's a massive barrier. How does that impact our ability to compete?
It essentially makes U.S. dairy products prohibitively expensive in China. That 84% tariff means U.S. dairy becomes about 104% more expensive than products already holds a dominant position in China's import market, maybe 46% share, largely thanks to their existing free trade agreement. This tariff puts U.S. producers at a very, very significant disadvantage.
So it's not just the tariff itself, but also the existing trade landscape that's making things difficult. Are there other factors on the Chinese side limiting demand?
Yes, there are several other important factors to consider. China has a very high prevalence of lactose intolerance, estimated around 87% among teenagers.
That naturally limits fluid milk growth.
Exactly. Plus, China's birth rate has been declining, which directly impacts infant formula sales, historically significant dairy import.
Right.
Their economy is also facing some headwinds, issues in real estate, high youth unemployment, which can lead to reduced consumer spending on non-essentials like dairy.
It sounds like even without the tariffs, the demand picture in China might be more complex than just a dip in their domestic production. What about China's own dairy industry? We saw reports of big growth recently.
That's correct. Between, say, 2018 and 2023, China really pushed to increase domestic milk production, part of a strategy to reduce import reliance.
But now
they are facing a situation of oversupply. This has resulted in a considerable drop in raw milk prices, around 28% between 2021 and 2024.
Ouch.
Yeah, and this price decline has put significant pressure on smaller dairy farms within China, forcing some out of business.
So they're grappling with their own domestic issues of oversupply and potentially softening demand. It paints a pretty clear picture for U.S. exports to China near term.
It does.
What's the key message for U.S. dairy farmers from the Bullvine's reporting on this?
The primary takeaway is, don't anticipate significant export opportunities to China in the foreseeable future. The recommended approach is to actively diversify markets. For smaller operations, maybe focusing on niche markets domestically. Medium-sized farms could explore funding, like through the USDA's Market Access Program, to help build markets in Southeast Asia or Latin America.
In larger operations.
Larger operations might need to reevaluate their product mix for less impacted markets, or even consider joint ventures in countries with free trade agreements with China. Key alternative markets to watch are definitely Mexico, Southeast Asia, and the Middle East North Africa region.
It really underscores the risk of relying too heavily on a single export market, especially right now.
Absolutely. Diversification is just crucial risk mitigation in this environment.
Let's shift our focus now to what the Bullvine has been calling a perfect storm brewing for the U.S. dairy industry in 2025. Initial optimism seems to have faded considerably.
Yeah, things have shifted.
What are the main factors contributing to this challenging outlook?
Several factors are converging to create a really difficult situation. We've seen a significant decline in milk prices since the start of 2025. For example, Class 3 futures dropped by roughly $2.50 per hundredweight.
And what does that mean for a farm?
Well, for a farm producing around 1 million pounds of milk each month, that can translate to a substantial revenue cut, maybe $25,000 a month.
That's a big hit.
Yeah, and Class 4 futures have seen a similar downward trend.
But it's not just milk prices, is it? There's also this unusual situation with butterfat.
Yes, the butterfat paradox, as it's being called. Despite U.S. cows producing milk with pretty high components, averaging around 4.4% butterfat and, successful butter production here.
We're making good butterfat.
Right. But we're seeing a significant surge in butter imports, up by a remarkable 46% compared to last year, reaching 172 million pounds.
Imports are up that much.
Yeah, and this influx of imported butter has contributed to a notable price decline. CME butter prices in April 2025 were down 19% compared to the previous year.
So we're producing plenty of butterfat, yet we're also importing a lot of butter, which is then driving down domestic prices. Seems like a disconnect.
It certainly highlights the complexities of global commodity markets and potential shifts in trade flows or consumer demand.
Hey, good news.
On a slightly more positive note, there has been some relief in feed costs. Prices for both corn and alfalfa have come down.
So maybe lock those in.
Yeah, it would be prudent for producers to consider locking in these lower prices now to help offset some of the challenges with milk prices.
Every little bit helps in this environment. We're also seeing this increasing trend of beef on dairy breeding. What are the implications there?
Right. The growing popularity of beef on dairy, record beef semen sales last year, it does provide a short-term benefit. You get better cash flow from selling those crossbred calves.
Make the downside.
But there is a potential long-term risk of creating a shortage of replacement heifers for dairy herds down the line.
So a potential trade-off between immediate cash and long-term herd sustainability.
Exactly. You have to weigh that carefully.
Given all this market volatility, what are some of the key strategies the Bullvine is suggesting for producers to navigate this perfect storm?
The key survival strategies really center around careful risk management and cost control. Locking in those lower feed costs, definitely a priority. Maximizing revenue from the beef market crossbreds. Cull cows make sense short term, but producers need to plan carefully for future replacement needs.
And risk management tools.
And perhaps more critical than ever, using tools like dairy margin coverage, DMC, and dairy revenue protection, dairy ASH-RP. They'll be essential to help stabilize those fluctuating profit margins.
It sounds like a time for very careful planning and strategic decision-making to weather these converging challenges.
Absolutely. A proactive and well-thought-out approach will be crucial.
Now, let's delve a bit deeper into the impact of trade policies. It seems the mere threat of tariffs can have a significant impact, even before they're implemented.
That's a very astute observation. Our reporting at the Bullvine indicates the U.S. dairy industry has become increasingly reliant on exports, anywhere from 15 to 20% of our total production now heading overseas.
And key markets are at risk.
Major markets like Mexico and Canada, which together account for about 43% of all U.S. dairy exports, are currently facing the risk of retaliatory tariffs and the impact of just the threat of new tariffs. It's already been felt. Milk futures reportedly dropped by around 12% since February 2025, simply due to these credible threats.
Wow, 12% just on the threat. That really highlights market sensitivity to this uncertainty. What about the USMCA agreement with Canada and Mexico? Wasn't that supposed to help?
Well, while the USMCA was intended to improve trade relationships, administrative barriers continued to present challenges for U.S. exporters, particularly with Canada trying to fully access the intended duty-free quotas.
So practical hurdles remain.
Exactly. It's not just about the official tariff rates. There are also practical hurdles in taking advantage of those preferential rates.
So even with agreements, trade isn't always smooth. What's the impact of this uncertainty on farms of different sizes?
Small and medium-sized dairy farms are often the most vulnerable to these kinds of trade disruptions. Estimates suggest that medium-sized operations could potentially see their annual income decrease by as much as $56,000 due to tariff impacts.
That's significant.
It can really exacerbate existing financial pressures. And while there was that 90-day pause announced on most new tariffs back on April 9th, the overall situation remains quite volatile. The advice continues to be lock in contracts where possible, explore hedging strategies, and actively look to diversify markets beyond North America. Southeast Asia is one region with potential.
And China during this pause.
Interestingly, during this same period, the tariff on U.S. dairy imports into China actually increased to 125%.
125%. So the situation with China is actually worsening even with the temporary reprieve elsewhere.
Precisely. It really underscores the need for adaptability and exploring alternative markets. Relying solely on traditional markets just isn't a guarantee of stability anymore.
Let's drill down further into those increased Chinese tariffs. We've discussed the broad implications, but the Bullvine pointed out a specific crisis unfolding for U.S. exports of whey and lactose. What makes these so vulnerable?
The increased tariffs on China are indeed particularly damaging for U.S. whey and lactose. These two product categories together represent over, $500 million in annual sales to China?
$500 million.
Yeah, and what makes this so critical is that China is a major consumer of these ingredients. They absorb a very significant portion of U.S. exports, around 42% of U.S. whey, and a staggering 72% of U.S. lactose.
72% of our lactose exports go to China.
That's the figure. So this 84% retaliatory tariff effectively renders U.S. whey and lactose uncompetitive in the Chinese market almost overnight. It essentially slams the door shut,
Those are huge percentages. Losing that access must create a significant oversupply here.
Exactly. We have historical data from the trade dispute back in 2019 that offers some insight. Back then, a 25% tariff led to a 55% drop in U.S. whey exports to China and a substantial price collapse.
And the tariffs are much higher now.
With the current tariffs at 84%, the impact could be even more severe, especially when you consider that U.S. production capacity for these products has actually increased since 2019.
So more product, much smaller market. Who potentially benefits from this shift?
Well, New Zealand, with their duty-free access, and the European Union offering food-grade products, are very well positioned to gain market share at the expense of U.S. producers.
Their trade advantages become even more significant.
They do. Now that the U.S. is facing these high tariff barriers,
it really highlights the strategic importance of those free trade agreements. So what's the immediate advice for U.S. producers heavily involved in whey and lactose?
the immediate need is to aggressively pursue diversification of export markets. Focus on regions like Mexico, Southeast Asia. There also needs to be a strategic shift towards producing more value-added dairy products like cheese and butter, which might be less severely impacted.
In contracts.
And where possible, securing forward contracts in alternative markets will be a crucial risk management tool. This situation really just underscores the significant dangers of over-reliance on a single export destination.
A challenging but necessary adjustment for that sector, it sounds like. Finally, let's turn to what the Bullvine described as a potentially existential threat. The proposed fines on migrants facing deportation orders.
Yes.
This sounds very concerning given the industry's reliance on immigrant labor.
It is indeed a very serious potential threat. The proposal is to impose fines of $998 per day on migrants who have received deportation orders. Per day. And the dairy industry in the U.S. is heavily reliant on immigrant labor. They make up a significant 51% of the workforce.
Over half.
And are responsible for an even larger 79% of the nation's total milk production.
79%. Those are incredibly high percentages, highlighting just how crucial immigrant labor is. What are the potential consequences if this policy goes through and reduces that workforce?
Economic models project some truly devastating outcomes. We could see a reduction of approximately 2.1 million dairy cows.
2.1 million cows gone.
Yes. The closure of around 7,000 dairy farms across the country. And a near doubling of milk prices at the retail level, potentially reaching as high as $7.60 a gallon.
$7.60 a gallon.
Yeah. And major dairy states like Wisconsin, where it's estimated 70% of the dairy labor force are immigrants.
70% in Wisconsin.
Along with New York at 61%, California at 50%, they face particularly severe risks.
A potential doubling of milk prices would have a massive impact, not just on the industry, but on consumers too. Is there any way technology like robotic milking could step in here?
Well, while technologies like robotic milking systems are certainly advancing, the cost remains a significant barrier for most farms, especially those already facing the financial pressures we've been talking about.
How much are we talking?
A single robotic milking unit can cost upwards of $250,000. That's simply not a feasible investment for many operations, particularly not quickly in the current economic climate.
So technology isn't a quick or easy fix for this potential labor shortage. And this is looming at the same time as these significant trade challenges.
That's correct. This potential labor crisis is compounded by the risks of tariffs on dairy exports to Mexico and Canada. It creates a really damaging double whammy for the U.S. dairy industry.
A double whammy indeed. It sounds like the industry is facing a confluence of very serious challenges. What's the call to action from the Bullvine on this labor issue?
The industry is urgently advocating for congressional action, specifically to establish year-round agricultural visas that address the dairy industry's specific labor needs and prevent this potential collapse.
A legal, stable workforce.
Exactly. Without a viable solution like that, the U.S. could very well transition from being a leading dairy producer to becoming a net importer of dairy products.
It's a stark warning. Really underscores the fundamental role immigrant labor plays in our domestic food production.
Absolutely. It's a critical issue for the long-term sustainability of the U.S. dairy industry.
Well, as we can see, the dairy industry is navigating a period of significant turbulence, maybe even unprecedented turbulence. From the essential practices of maintaining udder health, right down on the farm,
the fundamental,
to the complexities of global trade wars and the looming threat of labor shortages, there are many interconnected factors impacting operations. We hope this deep dive into these key stories from the Bullvine newsroom has provided you with a clearer understanding.
Yeah, it's a landscape that demands careful attention and a proactive planning. Staying informed about these interconnected challenges is really the first and most important step towards navigating them successfully.
So for you, the listener, what stands out as the most pressing concern from all that we've discussed today? And what strategies are you currently considering or maybe implementing on your farm to address these challenges? This is an ongoing conversation, and staying informed and adaptable will be absolutely crucial in the months and years ahead. Thanks for joining us for this deep dive.